Hi traders, welcome to my Forex indicator video tutorial. In this tutorial, I shall be going through this Forex moving average strategy that actually I've written in one of my blog posts at forexindicator.org some time back. Okay, so in this video, the whole purpose is to show exactly how I make use of this strategy to trade, so that you guys can actually duplicate what I'm doing and try out yourself and make profit in trading. Okay, so let's go through what indicators exactly you need for this strategy. Okay, so this basically, right, this is the indicator that you need. Okay, you need a 20 and 50 EMAs. Okay, when you plot your moving average, right, there will be an option for you to choose between a simple moving average or exponential moving average. So what we are using here is actually the EMA, exponential moving average, and you select a period to be 20 and the other one is 50. That means you will be plotting two EMA lines, one period 20 and the other period 50. Okay, and the next indicator you need is the stochastic indicator with a setting of 933. Okay, your default setting should be 533, so you need to adjust this setting of the stochastic to 933 so that this strategy works better. Okay, so let me go to one of the example to show you how it works. Okay, on this euro dollar hourly chart, 20th of June 2013. So let's take a look at it. Okay, this is what happened here. You can see the price actually crossover. Okay, the criteria for one of the criteria for this strategy is that your crossover must be very strong, which means that you can see here is very good angle and separation. You can see this separation is very wide. It tells us that this trend is very strong. Okay, so what happened here is that we'll wait for the price to retrace back. Okay, retrace back to hit the EMA again. Okay, so what we're doing here is, first of all, we identify the trend. You can see here we have a trend here. So second, wait for a retracement, and third, we'll look at this stochastic indicator. Stochastic indicator to make sure that it hits the overbought zone. If you're planning to sell, you can see here at this point here, it actually hits the overbought zone. So let me indicate it by a line. It actually hits the overbought zone, and this is exactly where I'm going to enter the trade. Okay, once you hit overbought zone here, at this point I'll enter a trade here. Okay, so for me, right, this strategy that I'm using, I always set it to a risk-reward ratio of 1:2, which means that with one win I can actually endure two losses. Okay, that means, in other words, if even in 50% winning accuracy, okay, I still be making money every month. Okay, using this strategy, which means that, for example, if I have 10 trades every month on using this strategy, and it actually loses 5 and win 5, I still make money from this trade. That's the power of this risk reward ratio. Okay, however, this strategy actually makes more than 50% winning percentage. It sometimes can hit about 70%, which is a very decent strategy. Okay, so let's take a look here. Okay, this is my entry point. I indicate it by a black color line. Okay, so what happened here is that I'll set my stop loss 35 pips for all of these trades. I set as 35 pips. Okay, so let me draw first. Where's 35 pips? Somewhere around here. 1.32627. Okay, 627. Hold on. Okay, so we have 627 here, and the profit will be 70 pips. 1:2 risk-reward ratio. So let me see, 70 pip, where will it be? 70 pip is somewhere here. Okay, 1.31543. 1.31543. Okay, I indicate this using the blue color line. You can see the price actually moved up and then moved down to give me my profits of 70 pips from this trade. Okay, since the trend, right, can see is still very strong, what I do is to wait for the next retracement, and you can see, true enough, it actually touches the EMA here. But take a look at your stochastic indicator. Did it hit the overbought zone? No, it did not. Therefore, we don't enter the trade. What we are doing is we wait for the price to hit the overbought zone. You can see exactly it hits here. There's the overbought zone here. So once it hits, this is what we do. We enter a trade. Okay, let me mark out the point first. Once it hit the overbought zone here, this is where we enter a trade. Okay, so what you do is set a 35 pip stop loss. 35 pip will be 1.31574. Okay, again I'll set 70 pips profit for this, which is somewhere around here, 1.30513. And is it true enough? What happened? The price actually moved down, moved up, moved down, and give me another 70 pips profits here. Okay, and this is a very decent strategy. Okay, it works very well. It has very high risk reward ratio, very good winning percentage, and therefore this is a very profitable strategy. Okay, so this is how it works on the euro dollar hourly chart. Basically, this strategy works on all time frame and all currency. So I shall be showing you another example on another currency pair. Okay, basically in this next example, I shall be going through this strategy on the pound yen hourly chart on the 11th of October 2013. Okay, so let's take a look at the chart now. As you can see here, right, this is what happened on the pound yen on the month of October 2013, and you can see that the price actually moved up and formed a big gap here. So it tells us that it's going into a new strong trend. So what we're waiting for is for a price to come back to retest this EMA, and then at the same time it must hit the oversold zone. You can see that here it hit the oversold zone as it forms the candle here. So this is where we are going to enter a trade, indicate by black color line, set 30 pip stop loss, sorry, 35 pip stop loss is somewhere here, 156.349, 156.349, and I use a red color to indicate this stop loss level, and then target profit is 70 pips, will be somewhere here, 157.423. So indicate using blue color line. So as you can see, what happened here is the price actually moved up, moved down, okay, and then moved up again and hit our target profit here. Okay, so since it's trending, continuously trending, so what we do is wait for the next chance to trade. So I take away this line first. So as you can see, the price actually move, and eventually hits the, you can see the stochastic hit this oversold zone here. At the same time, this thing hits the so-called EMA. Okay, so what happened is we enter a trade at this point again. Okay, set 35 pips. Stop loss is somewhere here. Let me see. 35 pips is 156.811. Okay, 70 pips will be somewhere here. Again, it's 157.871. Okay, you can see here the price actually moved up, moved down, nearly hit our stop loss, moved up again, then it actually triggered a stop loss here. Okay, so therefore I want you to know that this strategy do not win 100% of the time, and in fact there's no strategy that win 100% of the time. The key to making money from trading lies in your risk reward ratio and winning percentage. As long as your winning percentage of 65% and above, and you have a risk reward ratio of 1:2, at least 1:2, if it's more it's even better, you will definitely be making income for yourself every single month without fail. Okay, so although now you can see that we have a losing trade here, so do not be discouraged by this, because this is part and parcel of trading. So what we do is that we wait for the next signal to come, because it's still a very good trending market. It has not crossed over yet. You can see at this point here it actually hits the so-called, let me throw it out here, hits this oversold zone again, and this is exactly where we're going to enter a trade again. Okay, so once we enter a trade, we again set the 35 pips. 35 pips is here, 156.961. Okay, so sorry, got a line color wrong. Let me change the color. Okay, this is the red color line, and then the 70 pip target profits somewhere here. Okay, somewhere here, 158.020. Change this to the blue color line. As you can see here, the price actually moved up, moved down all the way, nearly hit our stop loss, and then move all the way up again to give us another 70 pips. So you can see from one run we have 2 win and 1 loss. And from it you can see 2 wins. That means, let's say for example, every winning is set as example 500, the profit is 500, and the stop loss is always losing $250. So 2 win means that you win $1,000, and a loss means that you lost another 250. So actually you're still making $750 from these trades. Okay, so basically this is exactly how you trade this moving average strategy that I've written in my blog post. Okay, so for those of you who are interested to find out more about my blog, you can actually visit my website at forexindicator.org. Okay, this is where actually I showcase my forex strategy and tips to all of you guys, so that you can have a better understanding of what forex trading is and be able to make money from forex trading. And basically this is my blog, forexindicator.org, and here I actually share a few forex indicators that I use and how I use them. Here is the forex strategy that I use and how I use them. Okay, and at the bottom here is forex FAQ question that basically the readers of this blog ask me, and I post them here so that everyone can take a look at it. Okay, and most importantly, if you come here, you can actually sign up for my newsletter here, okay, and get to receive this book, Secret to Successful Forex Trading, that I've written, okay, which is very useful for all of you. Okay, so I hope that you guys enjoy this video tutorial, and I'll talk to you in my next video.